When markets move with headlines, war breaks out, oil prices spike, a new trade agreement is signed. Suddenly, markets swing wildly. But while the world watches chaos, smart investors make calculated moves. Welcome to the world of geopolitical investing, where political headlines become financial strategies. Subscribe now to decode the global signals driving your portfolio. What is geopolitical investing? Geopolitical investing involves evaluating how global political events influence financial markets. This could include elections, trade policies, sanctions, wars, and treaties. Investors monitor these developments because they can cause significant volatility in stocks, bonds, and commodities. For example, rising tensions between countries might cause energy prices to spike or certain currencies to weaken. Understanding which asset classes react most to instability, such as oil, defense stocks, or gold, is critical to managing risk. Historical case studies. Past geopolitical events offer valuable lessons. The 1973 oil embargo caused a global energy crisis, showing how OPEC's decisions can sway economies. The U.S.-China trade war led to major swings in tech and manufacturing sectors. The Russia-Ukraine conflict drastically impacted global grain and energy supplies. Studying these events helps investors predict market responses to current and future crises. Key geopolitical indicators to watch: investors track indicators like military buildups, changes in defense budgets, and political instability. Currency devaluation or interest rate shifts often follow geopolitical moves. Tariffs, sanctions, and new trade agreements also signal potential opportunities or threats. Watching these early signals can help investors react before the broader market. Tools for analyzing geopolitical risk. Professionals use news aggregators, geopolitical risk indexes, and research from intelligence firms to assess risks. Investors may consult political risk maps and sovereign credit ratings. Some hedge using options or ETFs that are designed to perform during high volatility or crisis scenarios. The key is staying informed and acting with strategic foresight. Asset classes that respond to global shocks. Certain investments historically perform well during geopolitical unrest. Gold and oil often rise due to safe haven buying or supply shocks. Defense stocks rally as military budgets expand. Cybersecurity firms gain relevance during digital warfare. Emerging market bonds can be volatile, while developed market government bonds may offer stability. Sector rotation. In a turbulent world, when geopolitical tensions increase, investors rotate into safer or opportunistic sectors. Energy and utilities often benefit, while travel or luxury sectors may suffer. Sector rotation helps mitigate risk and capture upside in the right industries. Case studies from wartime economies show how investor focus shifts during different types of crises. Geopolitics and currency markets. Currency markets react quickly to global events. Political instability can weaken a nation's currency, while strong leadership or peace agreements may strengthen it. Investors track interest rate decisions and foreign exchange reserves. In some cases, cryptocurrencies like Bitcoin gain traction in regions where trust in fiat currency erodes. Globalization vs. nationalism. In markets. Today's investing landscape is shaped by competing forces: globalization and nationalism. Policies like trade wars or reshoring initiatives shift supply chains. This affects pricing, corporate margins, and long-term investment decisions. As countries prioritize economic self-sufficiency, new sectors emerge, offering long-term growth potential. Building a geopolitical resilient portfolio. To build resilience, investors diversify by region, currency, and sector. Portfolios may include defensive stocks, commodities, and geographic hedges. Scenario planning, imagining outcomes under different global developments, helps prepare for surprises. ESG analysis can also identify politically stable or unstable investments. 2025 Outlook. Trends and hotspots to watch. Looking ahead, investors should monitor escalating tensions in the South China Sea, energy politics in the Middle East, and elections in Europe and the U.S. Cybersecurity and AI policy are becoming geopolitical flashpoints. Staying informed, flexible, and diversified will be key to navigating the unpredictable world of global investing. Subscribe now for weekly deep dives into the market forces behind the headlines. Think beyond the ticker. Invest through the headlines.